My name is Ian Walsh, and I'm with HardMoneyBankers.com. I wanted to review today a question that a lot of people have, which is what's the difference between private lending, hard money lending, some people call it soft money lending. In short, the answer is not much. There is no advantage truly to using private money. It's not greener. It doesn't act in a different way than hard money does. It's just a term that's in the industry that people use. Now, effectively, hard money and private money is typically money that you're borrowing from a private source, both from hard money and private money. Private money usually, though, is more of like an individual that you might bump into that has a limited amount of capital, but they can deploy it. They tend to be a little bit less sophisticated on average. I'm not saying this is everyone, than a hard money company that knows, does a lot more transactions and typically has a whole lot more funding. The rates that you'll bump into are usually very similar. The loan structures are very similar. Some of the downsides to what people call private money might be the fact that you'll run into the private money lenders will micromanage jobs is typically what I hear from time to time, whereas hard money lenders won't really micromanage your jobs because they have everything allocated and upfront. You really won't find a good hard money lender will never, they're not going to back out of a deal with you or get scared of it. They'll have docs and they'll have systems in place to already go to the table, because I sometimes hear that private lenders get nervous or cold feet at times because it might be their second transaction they're doing, and it might be a $300,000 deal and they have $400,000 to put on the street, and they're not quite as experienced as a hard money lender that's been doing lots and lots of deals over time, and so they have a lot more risk when you're risking more than half of your account on a single transaction, and they might back out at the last minute. So I'm not saying there's a disadvantage to private lending. I'm just saying it's a little bit different in the way that maybe the person supplying the funds, but the funds are the exact same. The concept is the exact same, and at the end of the day, the money is green, whether it's private money or whether it's hard money, and it's coming from a private source. So hopefully that clears up some of the questions about the difference between, or what people believe the difference between hard money, private money, and soft money really are.